The big story of the day on Wall Street was the parent company of the New York Stock Exchange in advanced merger talks with the owner of the German stock exchange, the Deutsche Börse. That news came as the London and Toronto exchanges announced their own merger that could create a major new trading center for mostly the mining shares.
Topic A tonight. Is America at risk of becoming a second-rate financial power on the global stage? Are we losing our economic leadership? The very symbol of American capitalism, the New York Stock Exchange, will be taken over by a German exchange, Deutsche Börse. And get this, it looks like the combined exchange will actually drop the NYSE name for good. And that is not good. Are we going to stand for foreign ownership of an American capitalist icon? Why must we give up this important flag? All right, U.S. stocks finished mixed today with a late afternoon rally pushing the Dow into positive territory for the 8th consecutive day. Blue chips up well over 5% on the year. Let's get right into our discussion about this takeover of the NYSE. We have Mike Ozanian, executive editor at Forbes magazine, Joe Battipaglia, market strategist at Stifel Nicholas, and Vince Farrell, CNBC contributor and chief investment officer at Soleil Securities. Hello, gentlemen. Vince Farrell, I want to start with you. You have a lot of experience in this. Look, I know this deal between the exchanges makes some business sense, but there's a part of me that is furious over the fact that it looks like a German thing has taken over our great symbol of American capitalism. We are losing our financial clout. What is your take? Why did this have to happen?
I feel the same emotional rise you do, Larry, that something like this just plain shouldn't happen, but I want to come up with a reason why it shouldn't happen. A couple of years ago when Unical was being bid for by a Chinese company, I said their reserves are over, that's okay. But this tells me what we have done is we've allowed the bully to overregulate to such an extent that companies around the world don't want to list on the exchange. They want to go elsewhere. And yes, regulations required. And yes, Wall Street went too far. But we have gone too far if we have overregulated ourselves that the rest of the world has picked up the slack and now can take over our New York Stock Exchange. I just can't stand it.
Joe Battipaglia, I want to get your take on this. Are we being too emotional here? Because I take symbols very seriously, Joe. And I want to know why, for example, the NYSE couldn't have taken over Deutsche Börse. And I want to know why Deutsche Börse has to have a 60% position. And I want to know why the very name, New York Stock Exchange, which is an icon of capitalism. I know most of the trading is done off the floor, but that's irrelevant. They are taking us over. They're going to take the name out of our lexicon. Now, Joe, what is your feeling on this?
Well, what, have we lost our backbone? It is true that the last couple of years, the U.S. has suffered a setback financially. We've had these kinds of crises in the past. On the other hand, we've come out of those stronger and better. I thought we were leading the charge of global capitalism. So if corporations like Apple, the Procter & Gamble, can become global world beaters, why can't the financial markets and the exchanges themselves go on the offensive? So somehow or other, we got tired behind the switch here and didn't go on the offensive, made ourselves vulnerable. And to the point about overregulation, we're still a very attractive place to be. That's why the Deutsche operation is coming here. That's why the CME is vulnerable, and so is the over-the-counter market, for that matter.
Mike Ozanian, I'm not against global free trade. I'm not against global free investment flows. I'm not against these big American companies that go worldwide. What I'm against is losing symbols and icons. The New York Stock Exchange is a huge piece of American history. When Dick Grasso rebuilt it and reopened it in, 10 days after the 9/11 bombing. It was a huge symbol that America is back. That's what's got me so annoyed about this. And that they're taking us over. That has me annoyed, too.
It's why, Larry, as Vince pointed out, is because of our own stupid regulations. And we're just piling more regulations on with this FinReg nonsense, which is going to really hammer the hedge fund industry. And you know what? It's going to have it's going to go into CME exchange because Deutsche is going to gain a foothold in the U.S. on the futures market, so it's going to reverberate through other trading mechanisms. This is bad, and it's totally unnecessary, Larry.
Tell me why it's totally unnecessary, Vince Farrell, because I understand there's synergies and there's cost effectiveness and there's savings all over the place. I understand that there are new trading platforms for derivative exchanges and so forth. I get that. I am all in favor of that. But what I don't get is why the NYSE had to cave, okay? Even though their president is going to be the CEO of this company, how long we don't know, why couldn't have this merged differently to keep the primacy of the New York Stock Exchange, which is an American icon?
I like what Joe said. Have we lost our backbone? Why couldn't the New York Stock Exchange build up its power by buying other smaller exchanges and get the capital mass necessary? Now, the reason it's going to be skewed towards the German exchange is you combine the total market caps of the two, and they happen to be much bigger than the New York exchange. So they said, great. Well, you just stand there and you say, we're not going to do the deal. It strikes me that this is a friendly deal. It strikes me as a deal that both sides said, yeah, let's do. I can't understand why those guys up in the New York Stock Exchange boardroom said, we are not doing this deal. I think they have lost completely. They have lost completely what they're supposed to be doing and looking only at what makes, quote, business sense. If I stir this pot together, look, the dollars go here and the cents go there, and doesn't it look pretty? Well, there's a lot more to this than making the numbers look pretty, and these guys have no clue how important this is.
This is a judgment decision. Symbolically, is America's economy right now in decline?
Yes. And
that's the key question. I
tell
hate
you
even
why.
to ask that question, but seriously.
You know what? I judge it by the dollar. You show me King Dollar, I'll show you a symbol of strength. You go back and you look at 1987 when stocks crashed, a weak dollar. You go back to other times when this happened, a weak dollar. Too much government debt and a weak currency have been behind almost every crash we've had.
You had a Fed chairman today up on the Hill. We're going to cover this later, jousting big time with Paul Ryan, who hasn't the slightest interest in defending the dollar.
Yeah, well, I guess, look what's happened to the dollar. Look how it reverberated in Egypt. People can't eat in other places of the world because we've been exporting inflation. And Michael Pinto of Euro Pacific Capital made a very good point the other day when he said, you know what? Our CPI underestimates inflation because food is too small a portion. If you look over to China, where food is a bigger component of the CPI, you see much higher inflation. People are having trouble feeding themselves. Energy costs are way too high. Look at the gas pump. Yes, we've created a lot of government jobs and we bailed out Wall Street, Larry, but the middle class is having a tough time of it right now.
Coming up on Kudlow, bye-bye NYSE. Has America lost its financial leadership to the Germans? Is U.S. financial and economic security going to be at risk? Will the government approve this transaction? There are reports tonight that Germany's Deutsche Börse is in advanced talks to buy the NYSE Euronext. That would create the world's biggest exchange, but is it cause for alarm? The NYSE is an American asset, an American treasure, and we are about to lose it. In fact, its own name is about to go down. Let's bring in our guest to talk some more. We have former SEC Chair Harvey Pitt. He's the CEO of Kalorama Partners, and Congressman Ed Royce, Republican from California, a member of the House Financial Services and the Foreign Affairs Committee. Ed Royce, thank you for coming on late notice. We appreciate it. I am kind of up in arms about this deal. I want to ask you, first of all, from an economic and national security standpoint, does this deal trouble you?
Well, we will have to see as CFIUS takes a look at this deal. But I'll tell you what troubles me about the trend, and that is something you pointed out 10 years ago, Larry. You said unless we have a pro-market environment, we are going to see capital as quickly as it can flee today from any market. Think about what you've warned in terms of the consequences of Sarbanes-Oxley. IPOs are overseas. Think about the warnings you made about the way we didn't address some of the problems in Dodd-Frank, and what does that mean about the derivatives markets going to Europe? Think about the legal uncertainty you've talked about. Now we see this coming home to roost. We need a dramatic reversal here. We need to bring down the corporate tax rate, and we need legal certainty and regulatory certainty in the United States. Otherwise, we're going to see more of this type of activity.
Harvey Pitt, do you see it the same way? Are you as concerned? I understand, Harvey, there are many business advantages to this merger. What I don't understand is why the United States has to play second fiddle in this merger. I agree with our friend Vince Farrell in the former prior segment. The directors of the New York Stock Exchange did not have to do this. At least they didn't have to do it this way. We're even going to lose the name Harvey Pitt. That is an American capitalist icon.
Well, I think the first question is, what are the real terms of the deal? The SEC is going to have an opportunity to look this thing over quite closely and make certain that the interests of U.S. investors are protected. And that is one thing that's paramount in any kind of combination of this sort. The second thing really is, why is the NYSE in this position? I agree with the congressman that there have been problems with undue regulatory overreach. But the other question is, has the NYSE been able to keep up with the competition both in this country and overseas? And this may be a reflection of the fact that that competition has gotten the better of the NYSE.
So the regulatory issues, Harvey, the regulatory cost issues and other ancillary issues, maybe tax issues, are taking their toll. Is that what you're saying?
They are taking their toll, and so is the lack of innovation. We've seen so much progress at in the trading markets, and the NYSE has not been at the forefront of all of that.
Ed Royce, come back to this. You mentioned CFIUS before, the Committee on Foreign Investment in the United States. Now, that's an executive branch committee, as I understand it, but the Congress must weigh in. You will weigh in as senior Republican on the Financial Services Committee. The Senate Banking Committee will weigh in. If this were Dubai, Ed, if this were China, we would say no to this deal. Now, I know the Germans are our allies. I get that. But are there going to be issues here that might stop this deal?
Well, a deal that right now hasn't been completed, I'm not going to comment on that. What I will say, however, is an observation that the Federal Reserve Chairman Alan Greenspan made some years ago, which is that we were in an age when the capital markets could just get up and march off to London. We could drive them out by creating a regulatory environment that is so inefficient that they can't keep up with the efficiencies in other developing markets around the world and with what is happening in Europe. And what we see today is a massive growth around the world in competitors to the New York Stock Exchange, and you see the lethargy, the lack of, jobs and capital that should be deployed in the United States, that should be deployed here at home, is going overseas because we don't have an initiative to reverse this. And that has to happen from leadership here in the House and Senate and from the President signing on. My hope is that the House reduces the corporate tax rate and addresses these other issues.
Harvey Pitt, from an SEC standpoint, now we don't know the deal, as you mentioned a few moments ago. Will they take a strong interest in this, Harvey? They're the primary regulators of the NYSE, if I'm not mistaken. What are they going to look at? What questions might they be asking from your experience as a former chairman?
I tell you, they will take a very detailed look at this, and I think they're going to have to ask questions such as, where will the revenues from the operation of the New York Stock Exchange go? Who will ultimately be responsible for all of the decision-making at the exchange? It's clear that if you have a merger with a foreign entity and you use a holding company structure, the U.S. may wind up being ousted from its jurisdictional oversight, and that's something I believe the SEC will try to protect quite vigorously.
Just expand that point. Ousted from its jurisdictional oversight. Are you saying the regulatory oversight?
Yes,
that the Europeans will now take over the regulation of our stock market and our options and our derivatives? Is that what you're saying? That Europe is going to regulate the U.S. financial system? Is that what you're saying?
That's a possibility in a merger of this kind, depending on what the structure is. I had this issue with the NASDAQ and the London Stock Exchange, and we insisted before they moved forward, and ultimately the deal didn't go through, but we insisted on making sure that there was complete responsiveness in the U.S. What would happen is if you have a foreign owner, the revenues can be upstreamed, and all of the legal issues and regulatory issues can be decided in a foreign forum. So it's critical to make sure that the New York Stock Exchange is regulated in the U.S., not overseas.
That's really amazing. Ed Royce, can you imagine, would you stand for it as a senior Republican on the banking committee, the financial committee, that the Europeans might actually wind up regulating our stock markets, our option markets, our derivatives markets, our interest rate futures markets? Or, let me put it to you this way, that the European regulators will be first fiddle and the American regulators and therefore the taxpayers will be second fiddle. Is that imaginable? Is that what this is going to come to?
Well put, Larry. Let me add one thing to it. I recently heard of an offer from Singapore to a major U.S. bank that they could provide a stable, certain regulatory environment for the next 20 years and zero corporate tax rates. They wanted that major U.S. institution to consider relocating to Singapore.